Business Partners. I'm your host here tonight. And today's show, we're talking about the West Coast. Is it a hidden gem for property investors? And recently, we recorded a YouTube video talking about where's the next Christchurch? Where are the hot spots to buy property in at the moment? And Nick R4357 said, puzzled. Great analysis from experienced people. Thank you very much, Nick. However, no mention of the West Coast while returning double-digit yields on cash flow, contending for long-term capital growth. So, Nick, why is it that we don't usually recommend the West Coast for property investment? And actually, I think you just did a TikTok about why you wouldn't invest in the West Coast, Andrew, and we had a lot of questions about this also. So that's what we're going to talk about today. Now, for anybody who lives in Auckland and doesn't know about New Zealand south of the Bombay Hills, what is the West Coast, Andrew?
So let's bring it up on Google Maps here. So it's the region on the west side of the South Island. So see it where we're hovering over, and it's a long skinny region, and it's on the other side of the Southern Alps compared to Christchurch or Canterbury. Now there's three council areas here. You've got Buller, Grey and Westland, and the main towns are Greymouth, Westport and Hokitika. Now it takes the title for being New Zealand's least populous region.
Yeah, not that many people living there.
Tiny.
About 32,000 people.
32,000. Well, it comes behind Marlborough, which I didn't realise it was that Marlborough was significantly larger as far as population goes. That's crazy.
Yeah, Marlborough is basically Blenheim, and that's it.
Yeah.
Blenheim, Picton, and some vineyards, and West Coast has got about 10,000 fewer people. I mean, there's more than the Chatham Islands, but that's about a 2-hour flight from Christchurch.
I think the most important thing when we're talking population here, it is the only region of New Zealand with a declining population.
Yeah, Southland comes pretty close, and we're talking about forecast population growth over the next 25, 30 years. But I think Southland's going to grow by something like 0.5%, but the West Coast is expected to decline by just over 3%. Now, people are interested in investing in the West Coast, as evidenced by some of these questions that we're getting on YouTube and TikTok. So why are people interested in investing in the West Coast?
Well, I guarantee that half the time this will be because someone's mentioned it. But I think the two main things, it is dirt cheap. So let's have a look at the pricing at the moment there, Ed.
So what I'm showing Andrew here, just for you podcast listeners, is what is the price of a West Coast house compared to the price of a New Zealand house. And what do we see? That on average, it's been somewhere between 40 and 60% of the average New Zealand house price. So at the moment, it's roughly 40%. So that means that if the average house price in New Zealand is $1 million, in the West Coast, the average house price is probably about 400 grand.
And if we look at, if you remember back a wee while ago, we did a podcast where we talked about the most expensive suburbs and the least expensive suburbs in New Zealand. Well, West Coast has 4 of the cheapest suburbs.
Now, let me just get this up for all of the YouTube watchers. So what have we got here? 4 of the top 10 most affordable suburbs in New Zealand are from the West Coast. And the cheapest on there is a little place called Cobden with an average value or median value of about $216,000.
Crazy to think you can buy. It's basically like being in a time machine and going back and buying old prices. Now, the other part is because prices are so low, that makes the gross yields very strong. So let's have a look at the yields here. So at that same location, your gross yield is 7.7%, which is very, very high.
Similarly, there's a little place called Blaketown on the West Coast. Average gross yield there, according to the CoreLogic Best of the Best report, about 7%. So the top 2 highest yielding suburbs in New Zealand are located on the West Coast. And you might wonder, well, why are the yields so good? And it comes down to this. In those larger cities like Auckland, you've got the highest incomes, in Wellington, you've got the highest incomes of all of New Zealand. And if you go to the West Coast, yeah, people will have less money. They'll earn less money there. But it might be, say, 40% less than in Wellington. But if you compare the house prices, as we just saw, are 60% less than the New Zealand average. So perhaps 40% income, and I'm making that stat up, but the house prices are way more cheaper. And that's why you still have a relatively healthy rental market, because the incomes are good compared to the house prices. You see that translate in terms of rents. Now, you might ask, well, if the population of the West Coast is declining and there's not that many people there, is it really a contender for capital growth? Because that's what our friend Nick said. And so I've been looking at the average prices in the West Coast compared to the rest of New Zealand. And if you look at it from right back in 1992, when the records began, in New Zealand, house prices across the whole country have gone up about 7.4 times. Well, it's not about, it's exactly 7.43 times. So you bought a house in 1992. Today, the price is 7.4 times what it was back in January 1992. For the West Coast, it's 6.3 times higher than it was back in 1992. So it hasn't gone up as much as the rest of New Zealand, but it's actually done pretty well. So after listening to all of this, Andrew, some people are going to think, guys, you're telling me not to invest in the West Coast. You're not selling it to me at the moment, though. What you've told me so far are the prices are cheap, the yields are good, and actually it's gone up in value, not as much as everywhere else, but it's done okay. So, Andrew, why is the West Coast so bad? Why are you telling people not to invest there?
Well, let's remember, most people are buying for long-term capital growth. That's just what most investors are looking for. And if you're wanting to build your wealth and you're needing to close a wealth gap of whatever amount, $1 million, well, you've got to think about how many West Coast properties you'd need to buy to be able to do that. So let's say you're buying in Wellington and you might pay $800,000, but you'd have to buy 3 properties in the West Coast to have the equivalent amount of assets going up at the same capital growth rate. So if we said they both go up at the same percentage growth rate for our forecasting, well, you've got to have 3 of those and 1 in Wellington. Now, what's the problem with having 3 of something? Well, you've got 3 sets of rates, you've got 3 sets of insurance, you've got 3 sets of maintenance, and 3 sets of letting fees. So you've got 3 properties now that you've got to pay all of those costs. All of a sudden, those gross yields get eroded away, and the net yield might not be anywhere near what you want it to be.
And sometimes what you see, especially with smaller regions, is they don't have as many ratepayers, and so they can have quite high property taxes compared to the value of the property. You see, it all comes back to the value of the property. Now, whether your property is in the West Coast or whether it's in Wellington, if they're in the same condition, they are going to take the same amount of maintenance. It might be $1,000, it might be $2,000 a year, because there aren't that many new builds being built on the West Coast that would have low maintenance. You know, so compared to the value of the property, $2,000 a year spent on each of your properties on the West Coast is a lot of money compared to the property value. $2,000 a year in Wellington is probably not that much, because what we're really talking about is if your properties are going to double in value over the same time, and let's just say it does on the West Coast and in Wellington, but in order to get that $800,000 worth of assets, you've got to buy 3 $260,000 properties in Compton in the West Coast. Now, bear in mind, there's probably only one person living there. I've probably just offended the 2 listeners we have in Compton. But the point there is that you have additional costs in owning these properties. So the gross yields look attractive, but actually the net yield may not look as attractive.
And I remember we did an episode a long time ago where we looked at the number of weeks it took of rent to pay for something like your council rates. Now, again, you might think, oh, well, you know, West Coast rate's only $2,000. It's cheaper than my rates in Wellington, which might be $3,000. Yeah, but if you're only getting $300 a week, it takes a lot of weeks' worth of rent compared to maybe, say, $700 a week that you're getting from Wellington.
The next thing is all about deferred capital maintenance. So what you often see in small towns is, for you guys on YouTube, you can see this. For you guys on the podcast, I'll explain what I'm saying here. But I've got a property available for sale in the West Coast. It's in Cobden, the cheapest part with the highest yields in New Zealand. And this property is being sold for inquiries over $230,000. Oh my God, so cheap, and it's a quarter acre. But Andrew, describe to me the condition of this property.
It's not good. I mean, it's not terrible, but it's definitely a renovator's dream.
Yeah, so this is the average house price in Compton, about 230 grand, which is what CoreLogic told us the average property is probably worth. And it's run down. The floors are not good. This would not pass a healthy homes inspection. So if you were to buy this, you'd be spending $5,000 at least to bring this up to the healthy home standard. You're going to tell me more, aren't
Way
you?
more than that.
You're going to be spending a lot of money to get this up to standard. The scenery actually looks
It's
quite
really nice scenery, but like
it's a nice view.
I mean, it's the nicest thing about that house.
But the issue that you often see in small towns is that the houses are run down. And the reason is that the houses are relatively cheap, the incomes are a bit lower, and so less money gets spent on bringing the house up to standard. And the reason is that the houses just aren't worth that much. Think about it this way. If you've got a really cheap car and it's worth $5,000, you run that car into the ground. You don't bother getting it a new engine because it's not worth it. So that's often what you see in these small towns. Let's take a look at another one. This is in Westport, which
Looks
is
like a nice wee house.
Well,
But
let's take a look at the inside.
Okay, so it's quite dated. This looks like where I grew up.
In working class Waltham.
I think it's the same carpet.
That was a very popular carpet
It
back
was.
in the time. I think that
It had managed to hide all sins, that's for sure.
you see, I don't think this house is that bad, but it is very tired. It's very run down, and that is what you tend to see in smaller towns where people don't spend as much money on their house. That's being asking price on that is $239K. So what I'm trying to get across here is that sometimes when you look at those average prices and you think, oh my God, the average price of a West Coast property is 40% of the average house price of a New Zealand property. And part of the reason isn't just, the house happens to be in the West Coast, so that's why it's cheaper. Well, that's part of the reason, yes, but part of the reason is that the houses aren't as well maintained. The houses aren't as nice. And when I've been looking at, through TradeMe, looking at a house, you might think, oh, that's actually quite good. You know, if that was in Christchurch, it might be worth $650K. Well, it's in the West Coast and it's actually $550K. So yes, cheaper, definitely cheaper, but not substantially cheaper. So there are two effects here. One, the fact that it's in a cheaper location, but two, the fact that the house isn't as nice because it's not as well maintained. And that's where you've got to think about long-term capital maintenance as well, Andrew.
And I think this is the big one, particularly for these smaller regions. When you think about something like a roof, which is pretty much going to cost a similar amount, no matter where you are in the country, it might not be exactly the same, but let's say it costs $25,000 to replace a roof in Wellington, and it might cost $20,000 to do it in the West Coast. Okay, well, you've just gone and bought 3 of them, so you can close that same wealth gap because you need the same value of assets. Well, that now, when you're replacing 3 roofs rather than 1, you're spending 60 grand rather than that 25 grand, and that's where all of a sudden that bottom line, the actual profit you're making, the net yield, that's going to be what really gets squeezed, and all of a sudden it's not a good investment at all.
Because you've had to spend an extra 35 grand replacing roofs, and you're probably more likely to have to replace a roof if you've bought something that is a bit more run down. Bear in mind too that according to CoreLogic, replacing things like roofs doesn't add any value to a property, and the reason is that when people go to buy a property, they expect it to have a working roof. And if it doesn't have one, that's where they discount the price. You know, fixing something like that doesn't add value. The other thing that I just want to say is come back to the declining population point. That's the part that really concerns me about the West Coast. And even though we know that regions that have declining populations can still go up in value, Ruapehu is a district where we have seen declining population quite substantially, about the same as what we'd expect in the West Coast. But we've still seen property prices go up, not as quickly as everywhere else, but they still have increased. But the reason why that declining population really concerns me is that it's going to take substantially longer to find a tenant. It's going to take substantially longer to sell your house. So on average, it takes about 3 times longer to sell a house in the West Coast compared to the rest of New Zealand. Wow. So it might take you a month to sell a house. Everywhere else, in the West Coast, it might take you 3 months to sell your house. So your house isn't as liquid in that case because, and on top of that, you've probably got a month of settlement after you sign the contract.
Plus, of course, you've got no tenants for that time often.
So the issue there is if you need to sell that house for whatever reason, well, it can actually be very difficult. It could potentially be very difficult to find tenants as well, because while the home ownership rate isn't actually that high, it might be around 70%, maybe slightly higher than the rest of the country. The fact that there just aren't that many people looking for houses means you could go for quite a substantial time without a tenant. I mean, for instance, Reefton has about 1,000 people, right, Andrew?
Yeah, correct. And so let's say that represents 450 houses. Would that be about right?
Yeah,
450 homes. Right. Is it right?
That's correct.
Don't sound so surprised.
No, I was, because I didn't tell you that.
450 homes, about a third of those rent. Now, what happens if we go, you know what, Reefton, they've got that little bit of gin there, let's all get an investment property there. All of a sudden, you get this oversupply of rentals quite quickly. It doesn't take much of a shift for there to be an oversupply of rentals, and now we're all charging less rent so that we can get someone in there and fight over each tenant.
Yeah, for instance, if we told every property investor that we work with here at Opus Partners to buy a property in Reefton, we would double the number of properties that are available in that very, very small town in a year.
Yeah.
Do you know what I mean? It's not going to be good for the rental market. So, look, I think maybe a couple of people will make money in here, but it's not somewhere that I'd encourage a lot of property investors to go to invest in. One of the other big issues with the West Coast is it's pretty boom and bust, depending on what's happening within the economy there. You see, a lot of the money being made comes from extraction of natural resources. So did you know, during the gold rush in the West Coast, Hokitika, which has about 2,500 people now, had 25,000 people living there.
Wow.
I mean, this is many years ago. But where the population tends to increase is when a new industry crops up, whether that's extracting gold, whether that's extracting coal. Apparently, there are some quite large deposits of uranium there.
Really?
And the West Coast was a sought-out region during the 1950s when nuclear was becoming a massive thing. So there's a lot of resources in that region. But the question is the economy going to boom and bust every time a new industry appears and then retreats for whatever reason? The answer is absolutely yes. And that's one of the things that scares me about the West Coast. Right, let's wrap it up there, but please don't forget to rate, review, and subscribe to the podcast. It really does help us get the message out to more people. And hey, if you want to see some of the stuff we've talked about on this show and you're listening to the audio version of this podcast, check out our YouTube. Just Google Opus Partners YouTube. It'll be the first thing that comes up. And make sure you hit the subscribe button, because that really does help us get the message out to more people. Thanks for listening to the Property Academy podcast. I'm your host, Tim Knight. We're going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most. Until next time.